Good, good afternoon, everyone, and thank you so much for taking the time out to join us for the launch of our 6th import duty investigation report. I'm going to kick off a presentation, then I'm going to hand over to our facilitator, Mbongeni, which will facilitate a discussion and take questions. If you have any questions, please post them in the Q&A box, or pop your hand up when the debate is finished, and we'll deal with all of them. All right. So firstly, it's astonishing to think that we've reached a moment where we've now issued our 6th report on tariff investigations. And this is really the first report where we're starting to see an improvement in performance. So very well done to ITAC, very well done to the DTIC and the Minister. Very heartening to see that we're starting to move in the right direction. So there really are, I suppose, 4 things that we're trying to get in place, and hopefully this report gets us to that point, or helps us get there. So we want to get to a predictable tariff process, which means a tariff investigation finishes on time. You know that if there's no local production, you can get your tariff removed. You've got a sense effectively on what the tariff policy looks like. So each application should not be a shot in the dark. We'd like there to be some predictability. To the point of removing tariffs where there's no local production, I think this is incredibly important. One of the key reasons why South Africa is manufacturing less than it should is that we're not terribly competitive. And burdening companies, for example, a manufacturer with a raw material tariff that makes no sense because you can't secure the product locally, we think those should simply go. The outcomes should be based on what comes out of the investigation, not by what could be squeezed out of the applicant. And so we're going to have a fairly detailed conversation on reciprocal agreements a little bit later on. But what has happened is our tariff policy, whether advertently or inadvertently, has become increasingly transactional. And we think that really diminishes the value of the policy that we have, reduces its ability to do the things that you want tariffs to do or not to do. And then review tariffs after they've been imposed. So, on that last point, let's kind of dive in and look at what happens with that review process. So in last year, remaining consistent from prior years, around 93% of all of our tariff codes, which attract a tariff, and the value is roughly proportionate to the number of codes, have tariffs in place which have been there for more than 20 years and have not been reviewed in that period. So what does this mean? It means at some point, in fact, it's now 22 years, at some point before 2003, these tariffs were imposed, and no one has ever looked at them since then. And we've been very generous with the 20 or 22 years more accurately, because some of these go back to the 70s or 80s. So they're legacy tariffs that have a very, very long history that has kind of been sticking around. And kind of demonstrated, one of my favorite charts, which apparently confuses almost everyone else, is we've taken the data. When you get the report at the end of this, we've taken the data and we've said from 2003, when ITAC came into existence, we've then said from where we are now, we'll go back in 5-year increments, and that becomes quintile 5, 4, 3, and 2. And then quintile 1 is everything before then, which at this point means everything before 2004. And so the vast majority by value and by number of tariff codes have simply not been reviewed, which means when a tariff goes in, it is incredibly sticky. And we are starting to see a shift on this. The shift didn't happen in the period of this report. We're seeing this enormous steel review, which we'll touch on in a second as well, which is happening at the moment. But for the most part, when a tariff goes in, it tends to be there for a very, very long time. So that's kind of the first thing. We need to review them more frequently. The second thing is this predictable process. So we have two periods since ITAC came into existence. We have the period between 2003 and 2011. And in this period, the policy was you have 12 months to finish an investigation. And then at the end of that, they said, no, this is a problem. They're very old cases, not getting resolved. We need to get our investigations wrapped up in a 6-month period instead. And so here's what happened. This is a very busy chart, but let me quickly explain what it is you are looking at here. So the bar chart that you're seeing at the bottom, each bar represents a 6-month period. What we do is we go to the last day of that 6-month period. We look at all the cases that were open at that time, and then we do just a simple average. On average, how long have those cases been open for? And then the line above that is, out of that group, we say, what is the single oldest investigation? How long had it been open for? And so you will see here in the beginning, on average, we were taking 8 months, but our oldest case was 33 months. And in this period where we had 12 months to complete a case, the average over there was, in fact, 10 months. So a little bit under, but there were some old cases. And then we see over here, we have this rule change. Now it becomes 6 months, and it's been there forever afterwards. And so from there onwards, you can noticeably see that the average amount of time drops. And then there's an event with this orange line. So in the period between the 12 months to the 6 months, in that period between there and the orange line, on average, it was taking us 8 months to complete an investigation. And then we get past this orange line, and it suddenly averages 25 months for that period afterwards. And so the question, and it's a valid question to ask, is what happened between the period before the orange line and the period afterwards? And the answer is, this is when our very transactional tariff policy began happening. So this was the moment when Minister Patel took over as the Minister of Trade and Industry. And it was in that moment that we began insisting on this concept called the reciprocal agreement, which is in order to get your concession given, in order to get some kind of duty position up or down, you now needed to make a very personalized agreement to do certain things. And so in that period, we see a massive increase, both in the average and the oldest cases. Now, you will see near the end of this chart, we start to slowly see a downward slope, which is good. So what this is telling us is it's marginally starting to improve. However, the oldest cases are not being cleared. So the backlog is still there, but the more recent cases are starting to, kind of the cases in the middle, if you like, are starting to get cleared. The very old cases are still there. And we're going to get to an example of the kind of bad things that happen when you don't resolve your old cases. Now, this chart over here is a chart looking at where the time is spent. So when an investigation wraps up, all of the details, the report, etc., are published. And then we know exactly when ITAC took their decision, and we can then see when SARS implemented their decision. And so we can work out how much time was spent with ITAC and how much time was spent with the ministers. Now, what's important here is ITAC is where the investigation happens. So this is kind of where all the work happens. And then the minister should not be relitigating the case. And his options are, I like what ITAC has to say, he signs it off. Alternatively, he says, I don't agree with ITAC, and he sends it back to them. But that really should happen in the minority of cases. And so you can see here, the light blue is the average amount of time it was spent at ITAC. And you will see that the dark bits were much a much smaller part of the total period, which is as it should be. And then we begin seeing a shift here. So both in the number of cases are moving up, so it's not good, but the amount of time at the minister starts to dominate. And that's problematic because the minister has no legal investigative role. He only has a policy role, and what he can and can't do is quite limited. But what happens is the minister starts to take upon himself an interesting way to intervene in the investigation. And this is in the form of the reciprocal agreement. So now, irrespective of what ITAC finds, we begin seeing a shift to the decision being largely weighted towards what is agreed or what is not agreed by the applicant. And there are severe consequences. So the whole story of ground nuts can be found in our report. But broadly speaking, the ground nut industry, the roasters of ground nuts, make an application for a tariff increase. They make all of their commitments. They do all the bits and pieces they are supposed to. And then after 50 months, they have not received a response to their application. And just the other day, they withdraw their application because they no longer roast the nuts in South Africa. Now, the detail of this is quite complicated. They themselves, so not us, they themselves identify the amount of time it took to get to a decision as being a key reason why they no longer do their business. And so, we're not advocating in this report one way or the other for duties to go up or down. All we're saying is everyone is entitled to a predictable process rather than a process which is artificially interfered with, and that has quite serious consequences. So if we have a look at this chart over here, this is a relationship between the number of cases that are open versus those that are being finalized. And without a shadow of a doubt, we've just broken this up into 18-month chunks over here. You can see that you're finalizing 10 investigations in that 18-month period. Then you're finalizing 15, but then it comes all the way down to 8. And here we suddenly shoot up to 33. So this is where a lot of those cases kind of in the middle, they were not that old yet. That's where a lot of those got cleared. But so the pipeline is slowly working its way out. And so that's very good. We should commend both the minister and ITAC for picking up the pace on these things. Now, this is probably the most important chart in the whole report, which is the split between applications that come from the public sector or the private sector. And so the private sector is the ground nuts. We want duties to go up or we want them to go down, or whatever the case might be. The public sector is ITAC kicks off their own review. The steel review is an example, or SARS will sometimes ask for a review. And where it is government, we view those as quite different. So you see the orange bit at the top is government and the blue bit at the bottom is the private sector. And you'll see a moment here at the end of 2022 where the private sector simply disappeared. They stopped bringing applications that have been declining for a bit, and they've started at, oh, excuse me, I've got this ask about face, my apologies. Private sector drops to its lowest levels ever. Sorry, not public sector, private sector, which is over here at the end of 23, my apologies. We go all the way down to 2. And then it begins picking up again. Now, the question is, why did it get so low? And, that's difficult to determine. We've spoken to some companies, try to better understand what has happened. But a substantial part of it appears to be connected to what is the point of bringing an application if it's going to take 4 years for a decision to be taken? So because the tariff instrument baked into the thinking in the tariff instrument is that it's relatively responsive. If that responsiveness is removed, then it becomes unpredictable and people don't want to play that game anymore. And so that's kind of what we found. And so this just in summary is our big findings. There's lots of more detail in the report. But we just want to touch on one or two other things which I think are very important to talk about. So the one is steel. If you read the media, you would have seen never-ending streams of articles on steel. This is going to be the year of steel, without a shadow of a doubt. There are currently 10 open tariff investigations on steel. One of those, of course, is this enormous review, which covers about 67 billion rands worth of trade. There are 4 anti-dumping cases open. There are 2 safeguard investigations, and I've no doubt there will be more on the way. And so what this does is it certainly introduces uncertainty. There's no question the domestic steel industry is distressed, but the steel industry is going to come in for a hammering in the course of this year. And of course, I say that because the steel industry is not one thing. The steel industry is not ArcelorMittal. It's a value chain that runs all the way from an iron ore mine all the way to the guy who produces a padlock and everything in between. And all of those tariffs are currently being reviewed. And so we'll have to see what happens, but there will be a lot of activity. So for companies that are in the steel industry, you need to be very, very aware of what is going on. I'd encourage all of you to please subscribe to our blog. If you want to stay up to date on that kind of stuff, it's free of charge, and probably the best place to just stay on top of what is happening. The other bugbear I have is reciprocal agreements, and I think it's important we understand why I think reciprocal agreements are so pernicious. And so what a reciprocal agreement is, let's go back to my example of I'd like to get duty relief on this raw material. We have around, in a good year, maybe 20 companies that will apply for a tariff change. Those companies, and you'll see I say tariff change could be up or down. Whatever the outcome of the investigation, before a change is made, the company is going to have to sign a reciprocal agreement. That agreement could be a commitment to employ more people, invest more in plant, export more, spend more money on training, etc., etc. Some of these are quite onerous in their requirements. There's obviously pushback, which slows down the process, but even after the reciprocal agreement is signed, investigations still take just unusually long. But the first problem is, what happens if there is no local producer? Let's kind of deal with that scenario. Well, then you're paying the tariff. You have no choice but to pay the tariff. It's making you less competitive. It would appear to be no upside. That's fairly straightforward, but you still have to make the commitment. Now, the commitments are much easier to make if you're a big business than a small one. So employing extra people in a large company, it can disappear into the rounding. Employing extra people in a small business can be quite onerous. And so consequently, the reciprocal agreements are almost a tax on small companies interacting with government. The second problem is the applicant signs the agreement. Not everybody in the same business. So there's a penalty, if you like, if you're the applicant rather than a competitor. And so what you don't want to be is the applicant because of that. I'd mentioned they slow down the process. But what happens when there is a good application? Take the duties away or increase them. But what happens when the answer there is change the duties? And instead, what happens is the duties now can't be changed because of this. Now, government says, rightly so, that we have a complete catastrophe with our unemployment. And so something has to be done about that. I think most sane people would agree with that assessment. But the problem is that the 20 companies that interact with government, even if all of them have to sign reciprocal agreements, it is not going to make a difference to South Africa's unemployment rate. And so the the leverage is not going to yield a significant outcome. Even if you squeeze everyone, it doesn't make a difference. However, what it does do is it places those businesses at risk. And remember what I'd said earlier, we're generally an uncompetitive producer of most things. This is not helping us to become more competitive. It puts people off from using the instruments. We can see that in the data. But what happens when you get to a bad decision? So the decision is you should not increase the duties on this product. Maybe it's a monopoly, maybe even an abusive monopoly asking for the increase. And they say, listen, what we'll do is we'll employ an extra 5 people or 10 people, and then they get the increase. And if you think that can never happen, that would be a wrong assumption to make. The size of the rent that can be earned off locking your competitors out the market can easily exceed the cost of employing the extra people. But that is funded by somebody, usually the consumer. And because these agreements are all secret, we never know precisely what was agreed, which is my last point. That because there's no oversight of what happens in these agreements, they become open to manipulation, and that concerns me. And then quickly, I'm in my closing stretch, and then we'll get into our discussion. The only way anyone in government pays attention is if you have a master plan. So we have a master plan. It's the same one as last time. We're consistent, if nothing else, or we're ignored. I guess could be the other way to look at it, which is why it hasn't changed. But here's what we're asking for. One, please clear these overdue duty reviews. When we say that reviews are important, ITAC themselves acknowledge it. The vast majority of investigations which increase duties will say usually after 3 years, this duty must be reviewed. And usually the duty is never reviewed. So all we're doing is we're saying, you've made commitments to do the reviews, just get them out the way. We think that's important. Number 2, this is not a secret. I think we should get rid of reciprocal agreements. If we lose that fight, I do believe government should be publishing a non-confidential version of this agreement. I don't think the agreement, as it currently stands, which is completely negotiated between usually the minister, sometimes ITAC, and 1 or 2 people in the company, I think that is problematic, especially given that they're competitors very often in the space as well. Perhaps most importantly, we think the tariff regulations need to be amended. It's very obvious that the time limits are not respected. There's no current time limit to wrap up an investigation. We believe it's not unreasonable to say after 12 months, the investigation must terminate if a decision hasn't been taken, just so that we bring some certainty in. And we think if that happens, it's very unlikely that the minister will sit on it and not take a decision. So we think that's just a net good for everyone. The investigation report needs to get published. In fact, not so much even, we're saying after the investigation. What we mean is we need to know what ITAC's recommendation is, not wait until the minister has made his decision. So, my colleague Clive has done a lot of work on this around administrative justice and what that position is. But the problem is an administrative decision has been taken by ITAC, and nobody knows what that decision is. And then we think that just like you have with an anti-dumping case, where there's a prescribed date by which a review must be done, that rather than just putting in your report that after 3 years this should be done, that you almost kind of set the date and gazette it in advance so that everyone knows what is going to happen, and we again remove the unpredictability from the system. And folks, that is it on my side. I'm gonna hand over to Mbongeni, who will take things from here. Thank you.
Thank you very much, Donald, for that review of the report. Good afternoon, colleagues. My name is Mbongeni Ndlovu. I am the head of African Trade and Industrial Policy at TWIMS, the Toyota Vessels Institute for Manufacturing, and I'm also an adjunct faculty member at GIBS. It's my pleasure to facilitate this esteemed panel this afternoon to unpack some of the findings that Donald has presented to you. Firstly, just to congratulate you, Donald, and the XA team for such an important report that shines a spotlight on what's becoming quite a central instrument within industrial policy, and specifically making sure that you're able to share the information more widely. These kinds of decisions sort of sat on the website of ITAC, were within highly technical documents, and I think you've been able to really share quite a good synthesis of the issues. One thing we commend is not just the quality of the analysis, but also the way that it's been presented. So thank you very much. Just to introduce my panel very briefly, we have Prof. Marianne Matthee, who's a professor of economics at GIBS, a colleague of mine. Welcome, Marianne. And Tafadzwa Chibanguza, who's a COO, the Chief Operating Officer at SEIFSA, the Steel and Engineering Industries Federation of South Africa. Welcome to you, Tafadzwa. So in the interest of time, I'll just ask 1 to 2 questions to my panelists, just to start off the discussion, and then we'll open up for questions from the floor. Firstly, Marianne, starting with you, the report and the presentation speaks to the continuing challenge of addressing tariff reviews, the notable finding of the current 27-month average, and with the oldest review being 58 months old. In your opinion, and making reference to the report, what do you think is the criteria that ITAC should use to prioritize these import duty reviews? And what specific impacts do you think that these delayed decisions have on businesses and industries? And maybe with reference to the groundnuts example that's put into the report. Marianne?
Thank you, Mbongeni, and good afternoon, everyone. And I just want to echo my Mbongeni's sentiments on the report put forward by the XA team. So I think what the report highlights is that timely support to our manufacturers is really crucial, and if it's timiest, then it can be effective. If there is a gap between the application and the implementation, then I think that creates a vulnerability. So if you think about the industry and the groundnut example that Donald mentioned, is that these types of firms face unsustainable import competition. What happens is that their profit margins erode, their cash flow tighten, and essentially what happens is that investments stall and then operations shut down. So for industries where value is added that can absorb labor, this is especially worrying. So when a review takes more than 50 months or about 50 months to resolve, I think it is a clear sign of policy failure. So in essence, this red tape, almost paralysis, overrides the well-intentioned policy. So we want to provide the support to these industries, but the red tape prevents that from happening. So what I then think happens, and this is also what Donald mentioned, is that there's a loss of institutional trust and policy credibility. And those are cornerstones of a well-functioning economy, and especially critical for business and investor confidence. And we are in dire need of investment in the economy. Our numbers stand around 15% of GDP. We want it to be around 30%, so we want it double. And if things like this happen, then essentially investment reduces. So if you think about the industry, it's not just the firm itself, but also the local supply chain, the number of works in the supply, the number of jobs in the supply chain. So I think all in all, it just has a lot of negative implications. So what to do differently? And I think I agree with Donald's take in that there should be more statutory timelines for these tariff decisions and maybe some fast track mechanisms. But then again, I think the conversation should be, how can ITAC be more efficient internally, and how do they think about allocating their resources internally? And I think that is what Donald showed in one of the graphs. After these reciprocal agreements were set in place, this transaction-based approach, then you immediately see that the delays start happening. And so resources are being allocated in order to try to put these agreements in place, whereas those resources can actually be implemented to just clear the backlog and to have these reviews resolved and for them to be effective in place. So that would be my answer. Thank you.
Excellent. No, I appreciate that. Really highlighting the fact that this policy instrument, which should be an enabling instrument for business and for industry, can end up adding more red tape and administrative costs, and the delays and uncertainties actually build into the lack of investor confidence. And some excellent suggestions there around really trying to change this whole model from being one that's transactional to being one that's more enabling of investor confidence and improving in its efficiency. So thank you very much, Marianne, for that. Tafadzwa, for you, the report and the presentation speak of the fact that this is the year for steel. So we're delighted to have you here. One of the big headwinds that the steel industry is facing is the oversupply or surplus of steel. And of course, without domestic production, these global headwinds meet an industry that's struggling with competitiveness, struggling with high costs of energy. And we've seen, particularly with AMSA, what the result of that has been. Based on your industry insights, what do you feel are the immediate steps that stakeholders should prioritize in order to mitigate the risks associated with the current oversupply, and reflecting also on some of the considerations that the report has put forward to address the steel industry? Tafadzwa?
Thank you, Mbongeni, and afternoon to the participants on the call. I think I'd also like to just echo the congratulations to the XA team on this report. In it, it's good to see some of the positive moves, the reduction in the open cases, the time it's taking to adjudicate on cases, and even the private sector applications that we see on the increase. So I think to that, we can, in a way, credit some of that to the XA team. So congrats on that. And we followed this report extensively since the different iterations. So on the steel sector side, Mbongeni, I want to make 2 points around the way you frame the problem. And Donald very correctly said, the steel sector is everything from production, or metal production, of course, right down to palisade fencing, fabrication, and the rest, and padlocks was his example. And I want to take it from there because often in many of the instances, and perhaps correctly so, the upstream catches a lot of the attention, as we've seen right now. And that's where we've seen the overcapacity. The OECD's recent estimate is that the overcapacity globally is in the order of 500 million tons. if you consider that in context, South Africa's production capacity is 10 million tons, and we're producing 4 million tons. So, I mean, in that context of overproduction globally, we are a speck on that sort of global scale. Also, if you consider what's happening in the US with the potential tariffs there, there will be, one can make the conclusion that there will be additional excess capacity flowing then to markets like ours, right? So that gives the problem. But why I also wanted to contrast the downstream as well, which is important, is that we've also seen imports pouring into the downstream as well. Now, that's not necessarily the same context of overcapacity, but we see the same point of imports coming in. So that's why it's important to highlight. What's a concern is with the latest gap that we have in public procurement regulations, even state organs are some of the biggest importers, right? So we have that as being a pressure point right across the value chain. So I want to just stress that point, that the pressure is across the value chain. Then in the interest of time, you said, what should stakeholders be prioritizing? I think I want to, again, only table two issues. The first is that we need South Africa, if you look at the domestic side, there is so many pressure points. You've mentioned energy, you've mentioned logistics, you've mentioned, I've introduced this idea of the public procurement regulations, for example, that right now don't allow for, that allow for state organs to import, right? There's municipal failures. So the point is that there are so many domestic issues that we need to look at some level of protection for the domestic value chain, at least even if it's a stopgap until we attempt to resolve some of these issues. Now, that's not an overnight process, but that space is absolutely necessary. And that's only just to protect the existing capacity domestically. Secondly, what I do want to stress as what we think should be a priority, and Donald made a point in the report, and this stood out for me in the report, is this idea that you see that a lot more time is spent with the ministerial, the decisions are set more with the ministerial. And that's a perennial problem in South African policy making. I remember looking at this in the mining sector, where the same problem with mining right applications. You have it in the public interest commitments, in the competition, in the corporate activity, corporate action type of activity. So the point is, and you have it here, and worse off in this process, you have two ministers that must sit and decide on this. So that discretion that is afforded to the ministers who, as Donald said, should actually be sitting with a policy oversight role. We think that alone would move the dial considerably in shortening the time frame that we need to get this urgent protection of the value chain. At least that's one practical intervention that we think could be. And then, of course, reciprocal commitments are another discussion that lengthen the time. But of course, that's a further discussion. So let me park it there with those 2 points, Mbongeni, and hand back to you. Thanks.
Thank you, Tafadzwa. So, I mean, one of the highlighted points in the report is the fact that ITAC itself notes that as a general guideline, tariffs on the upstream industries will be reviewed to lower the input costs into the downstream labor-creating industries, whereas tariffs on the downstream will only be reviewed if competitiveness can be raised on a case-by-case basis. It sounds like what you're saying in the steel industry is, at the moment, there isn't that kind of clear rationale and structure in terms of its regulatory environment. Would you agree with that?
100%, Mbongeni. And again, another perennial problem that we've often seen is many of these interventions tend to have a knee-jerk and done as a stopgap type of approach without that total value chain approach to the intervention to a problem. So by intervening in one area, you create another, and in essence, that's why you have that problem. And in a discussion this morning, this again perhaps is an obvious point, but it's worth stressing here that without a downstream, you effectively don't have an upstream as well, in the sense that, you know, that's your market you're selling into. And the downstream, the split of employment is 90-10 in favor of the downstream. So it's labor intensive, labor generative, and a very important area to focus on, which is the downstream. Thanks.
Thanks. Marianne, just to open this discussion back to you as well. Tafadzwa makes mention of, which is also mentioned in the reports, this idea of ministerial discretion playing more of a role in policy making. You know, the report specifically rails against the idea of these reciprocal agreements. What is your view from an economic perspective? Do you think the reciprocal agreements achieve their economic outcomes, or do their negatives outweigh the positives as put forward in the report?
Thanks, Mbongeni. So the reciprocal obligations, I think, are very well intentioned. I mean, we all want to see increased investment in the economy. We want to protect and create jobs. We want to avoid unjustified price hikes. And we want to make sure that tariffs are used properly. But I think that there are several considerations or unintended consequences of this. And so I think what happens is that the larger companies who are more resourced, they are actually in a better position to meet such requirements or to achieve the targeted goals. The challenge comes in with the smaller firms who are actually in dire need of protection. So, I mean, by the stage that you are doing this application, you are already vulnerable. And so these companies then often struggle to meet the necessary obligations. And then I think, as Donald also mentioned, it risks increasing market concentration, and it then just reduces opportunity for broader participation in the economy. So I also think that it might be difficult for these smaller jobs for the smaller firms to necessarily create these jobs. And then we see smaller firms disappear, and again, we reduce the investment levels in the economy. Additionally, I think it might be good and well to say that we will meet the targets, but then there are challenges on the supply side of the economy. And that's what Tafadzwa was mentioning, is that there are municipal failures, there are water and electricity inefficiencies, transport inefficiencies. So it might not even mean that you have the supply side of the economy allows you to actually increase your production capabilities. And then I definitely agree with Donald that if there are no local producers, these types of agreements should definitely not be in place. So I think we should shift away from these short-term deliverables and rather focus on the structural issues in the economy. But as Tafadzwa said, this is a deeper challenge and something that's not happening overnight. But I do think that the structural reform programs in place are a first step towards that. But I would think that tariffs can't be a panacea for the challenges that we have in the economy. We need to improve our competitiveness. Because ultimately, I think what we need to be in a position to be competitively positioned in the global market. We need to be more export oriented, and we need to make it as easy for our firms to be competitive internationally. And so placing more onerous burdens on them makes that really difficult to do. Thank you.
Absolutely. So, you know, this idea that the policy making is becoming more and more transactional rather than enabling, and specifically that we need to be dealing with the structural issues first, rather than to try and manage the economy on a case-by-case basis, which is what these reciprocal agreements allow. We have about 15 minutes left. I wanted to take this opportunity to also open for some questions and answers from the floor. Colleagues in the audience, welcome you to please put forward all your questions into the chat. I see there's only about 2 questions at the moment, one of which we're currently working on the answer. I'll also remind you that this is a recorded session and is being broadcast with the media present. So, any questions that you may have may be taken up by the media. Colleagues, the one question that has come through during our discussion is around the issue of illegal imports. Right. So we see that, the ITAC and SARS are making all sorts of overtures to change tariffs, but the increase in illicit trade is actually undermining any of those efforts. Tafadzwa, in your experience in the steel industry, how would you characterize, the prevalence of illegal imports, and what do you think needs to be done to address that issue, in addition to the reforming of the regulatory environment?
Yeah, thanks, Mbongeni. Again, talking to the wider value chain, right? One of the most interesting cases that came up to our light as the SEIFSA office is one of our sub-associations in the electrical cable industry. But you see that across the board, even on the steel side, and the illicit product that's coming in, right? So it's a function of the ports ports being weak and all the rest. So I guess that's talking to the problem. I want to maybe highlight on what we think is an important solution, right? So the current steel review, which Donald would have then given the point that this is the year of steel, that steel review is looking at including things like non-tariff barriers, like in the form of standards provisions as import conditions. We think the standards from the NRCS is an important area that can be stepped up. And I'm using that, linking it to the cable association or cable industry. That's electrical cable. That has all manner of safety considerations, that has all manner of other sort of health and risk implications of bringing in that illicit product. So we think that's one important area. And of course, the review is looking to deal with that. Also, this import surveillance system, we also think is an important area that can assist in dealing with that. So short of those two, I mean, those are underway and we would very much support those. But the prevalence of those illicit products, we do see it right across the value chain. And that pressure is felt right across. And I guess it's not only in steel, I'm sure in other industries as well, that is a particularly interested, that is a problem facing them all. Thanks, Mbongeni.
Thanks. If I could take an opportunity to invite actually one of the authors, Anneke, Jansen from Vuuren, one of the authors of the report. I'm told that you've done some data crunching on this issue of illicit trade. Can you share some of your insights in your research on this topic?
So we're definitely seeing an increase in illicit trade. Specifically with tariff codes that are vague, if there's too many other tariff codes mixed in, and especially in the steel sector, it is a problem. We've worked extensively there specifically.
Yeah.
I don't know if Donald has anything to add on that.
I can add a little bit quickly. Sure.
So
illicit trade appears, as far as we can tell, to be driven by two things. The one is increases in duties. So the reason lots of people smuggled cigarettes and not bottled water is there's a big upside because there's such a large tax on the cigarettes. And so what we're finding is as the sectors that see duties increase, there's kind of a tipping point. It varies by sector, but when the tariff gets high enough, the circumvention shoots up. The second issue is complexity, which is part of what Anneke touched on. So what has happened with steel particularly is the tariffs have moved up significantly, but we've also created rebates, which are basically reasons that you don't have to pay the duty. And so we now have something around 80 rebates on steel. Many of them are very technical. There's no way when you open the container, you can look at the coil and see the difference. And so abuse starts to rise. And in that kind of situation, SARS often finds themselves overwhelmed. Secondly, they're not as well funded as the guys who are circumventing. And then thirdly, the payoff is enormous because the only winner at the end of this, if you kind of run it for long enough, is the dishonest traders who know how to get away with it. So the circumvention is an enormous problem. And in steel, my prediction is that problem gets larger before it gets smaller. So it's very good to see that the Steel Review, actively puts that down as an item to be addressed. So there's a real recognition that something has to happen there. But Anneke does a lot of work. She's built a lot of very interesting models to help detect customs fraud and illicit trade. And absolutely, the incidence of this is rising. There's no question about it. I can take another question, Mbongeni, if you want to maybe read it out, or I don't know if you have any observations on what I've said.
No, absolutely. And I mean, we've seen that in the clothing industry as well, the prevalence of under invoicing and some form of reference pricing or pricing signals have really assisted. But as far as I can tell, with the challenges that we have at SARS and other institutions, it's it's important for industry and industry associations to actually step in to support this challenge. The second question that's come up is, how can policy oversight of ministers be integrated into the technical process? Is there a possibility for ITAC to address the policy issues during the investigation stage? So obviously there's a technical process, which is an investigation that ITAC does with input from the industry. And then this goes into a ministerial process, which I guess is the political process. Donald, do you wanna tackle that question?
Sure. So there has been an attempt to do this, and I'd argue it's been sort of partially successful. So the one part of it is, ITAC now tends to regulate most of the agreements and issues. In other words, it's dealt with before it gets to the minister. The problem that arose under the previous minister is he would very often send his own team of people in afterwards. So ITAC would do their investigation, and then there would be people from a sector desk, and they would go back and they would do their own investigation. You cannot have that. So you either need to, if there's a ministerial concern around competence of the investigating authority, then that has to be addressed. What you can't do is kind of add that role into the policy space. So that kind of division is incredibly important. When the division's not there, then the regulator in the form of ITAC becomes irrelevant. And I think that's a very, very bad outcome for South Africa. We don't want to have a situation where the deep expertise is essentially not worth anything anymore. So there has been an attempt. I think in fairness, we have a new minister. We need to give him an opportunity to try to fix a lot of this up. I'm a huge fan of ITAC being expert at what they do and kind of getting on with it. And I think when these roles get confused, what ends up happening is their capacity gets degraded. Your best technical people don't want to work in politics. They want to do their calculations and all that kind of stuff. We want them to be doing that. We don't want them in a political role. And so I think that to fix that has got to be fixed at the political level. The legislation, everything's in place, but the politician has to comply and see their role as their role, not something extended.
Thank you very much, Donald. I see the Q&A is heating up, but unfortunately we're running out of time. So apologies, colleagues, we won't be able to answer. I think it's 2 remaining questions that are in the Q&A, but we'll definitely endeavor to write back to those colleagues to give them a response. I want to just be able to allow my panelists to have a parting shot with a question that I asked to both of you, and that is looking ahead, what critical change to South Africa's import duty policy could have the most significant positive impact on industrial growth and employment, referencing the report and the discussion we've had. Let me start with you, Tafadzwa, and then I'll close off with you, Marianne.
Thanks, Mbongeni. I think, and it's identified in the report, an important point is this idea that this is but one tool in the industrial policy toolbox, right? So it has to be viewed in that sense, and it can contribute. It can contribute to the outcome, that positive outcome. What I think, though, is worth mentioning is, and I reference it to what I had said earlier on, that it is the one instrument that can at least contribute to saving current capacity. And to the extent that we then treat it in an agile enough sense that where such an environment, where we have a shifting global environment of overcapacity of imports coming in, as I've mentioned earlier on, state organs being the primary importers of some products, you do need this as an instrument to step in and assist in that regard. With that said, the 2 points that we've already highlighted, this ministerial discretion, especially making decisions, the fact that it reduces the timelines, and the fact that they shouldn't even be involving themselves. I think Donald makes a good point there, that you then duplicate the capacity at the technical side, and in fact even undermine it. That we see is an important area of intervention. And more important, I think the point is also just to welcome the steel sector review that we are currently, that ITAC is currently undertaking, and requesting that those companies who are looking at this to please participate in this review. As has been said many times, the outcome will only be as good as the inputs that ITAC receive. Thank you, Mbongeni.
Thank you very much, Tafadzwa. Marianne, your
All right,
parting shot.
thanks. Thanks, Mbongeni. So I think for me, what stood out in the reports is that the tariffs reviews simply do not take place, have not taken place. I mean, 6.5% of all tariff codes have been reviewed over the last 20 years. And so the steel review, as is pointed out, is a good thing. But I think this notion of what we would call evergreen protection is we should be careful about that. We should have a clear view of whether a tariff is necessary or not. Are there even still local producers who do produce these things? Because ultimately what happens is that the downstream users and the consumers pay the higher prices. It leads to inefficient allocation of resources, which reduce our productivity. So my view would be that when tariffs are issued, it should be done with a sunset clause in order to let the producer know you've got a certain amount of time in order to increase your productivity and your capacity. But that being said, they should be able to do so, and the business environment must be conducive. Thanks.
Excellent suggestion. So in closing, with 1 minute to go, what's left for me to do is just to firstly get my parting shots, which is a reflection on the Minister of Finance, Enoch Godongwana's budget policy speech last year, 2024, when he quoted Alberto Alsina and Danny Roderick by saying the distinction between economics and politics is that economics is concerned with expanding the pie, whereas politics is concerned with distributing the pie. And I think it's a cautionary tale from all of the feedback that we've got from our experts that increasingly our economic instruments seem to be concerned too much with distribution and not enough about really enabling growth and really stimulating investment into the economy. And so some excellent points made from you, Professor Marianne. Matthee, thank you so much for your insights and contributions. And Tafadzwa Chibanguza, thank you for your insights and contributions. And thank you, Donald and your team at XA Global Trade Advisors for the excellent reports. We hope that it will be received in the constructive spirit that it was written and that many of these recommendations are taken forward. Thank you very much to the audience for your participation in asking questions and interest in this report. We'll definitely be responding in writing to all the unanswered questions and look forward to seeing you next time for the next launch of the policy review. Thank you very much.